Let me tell you something you won't hear from most trading gurus. The market isn't a puzzle to solve. It's a psychological battleground. And right now, whether you realize it or not, you're playing by rules designed to make you lose. I learned this the hard way over 20 years of trading, watching my own accounts explode and rebuild more times than I care to admit. But through all those losses, I discovered something far more valuable than any indicator or strategy: the hidden mechanics that really move markets. And more importantly, how to stop being the prey and start thinking like the predator. This isn't about giving you another set of trading rules. This is about pulling back the curtain on the game itself, the one they don't teach in courses or YouTube videos. The game where retail traders are the fuel that keeps the machine running, where your emotions are the leverage used against you, and where the difference between winning and losing isn't just analysis, but awareness. The day I realized I was the mark, it was 2014, and I was sitting in front of my screens, watching what I thought was a surefire setup unfold. EUR USD had been consolidating for days. The indicators were aligned, and the breakout looked textbook. I entered with confidence, placing my stop just below what I believed was strong support. Then, in what felt like an instant, the market reversed. My stop was hit, the trade was over, and I was left staring at a loss that stung more than usual, because this time I knew something was off. Later, I'd learned that the move wasn't random. It wasn't even about the chart. It was about liquidity, about where the majority of retail traders like me had placed their stops. The market didn't reverse because of some fundamental shift. It reversed because enough buy orders had been triggered below that level, and the big players were ready to take the other side. I wasn't just wrong. I had been played. The myth of fair play. Most traders believe the market is a level playing field. They think if they just study harder, find the right indicator, or refine their strategy, they'll crack the code. But here's the brutal truth. The market isn't designed to be fair. It's designed to transfer wealth from the impatient to the patient, from the emotional to the disciplined, and from the uninformed to those who understand the real game being played. Think about it. When you place a trade, who's on the other side? It's not some faceless entity. It's another trader, an algorithm, or an institution with access to data you don't have. They can see order flow, track retail positioning, and even predict where the majority of stops are clustered. They don't just react to the market. They engineer moves based on how they know traders like you will behave. The three big lies retail traders believe. The first lie is that technical analysis alone will make you profitable. Don't get me wrong. Price action matters. But the patterns you see on your chart aren't magic. They're footprints left by the collective actions of traders, and the institutions know exactly how retail interprets them. That head and shoulders pattern, they're aware you're looking for it. That clean breakout, they know you'll chase it. The game isn't about predicting price, it's about predicting behavior. The second lie is that the market is random. It's not. It's a liquidity machine, moving to where orders are clustered, where stops are piled, and where the most pain can be inflicted. The random reversals you experience, they're often anything but. They're carefully orchestrated moves designed to trigger the maximum number of traders before the real move begins. The third lie is that you need more information to win. The truth is, you don't need more indicators, more news, or more analysis. You need better filters, ways to separate real moves from traps, and the discipline to act only when the odds are truly in your favor. How to stop being the prey. So how do you flip the script? It starts with understanding liquidity, not just support and resistance, but where orders actually sit in the market. It's about learning to read intent, not just price. When you see a breakout, instead of asking, "Is this real?" you should be asking, "Who benefits from this move?" The best trades don't come from chasing what's obvious. They come from waiting for the crowd to be wrong, for the emotional traders to overcommit, for the stops to get run, and for the market to reveal its true direction only after the noise has cleared. That's when you step in. Not because it feels exciting, but because it's the logical play. The real edge. At the end of the day, trading isn't about being smarter than everyone else. It's about being more aware. The market doesn't care how much you know. It cares how you react. And the traders who survive long term aren't the ones with the best strategies. They're the ones who understand the psychology behind the moves, who see the traps before they're sprung, and who have the patience to wait for the right moment rather than forcing trades out of boredom or ego. This is the game. And now that you know how it's played, the question is, will you keep being the fuel or will you start being the fire?